Ladies and gentlemen, archivist here. Stop looking at the mugshots of Nicolas Maduro. Stop looking at the staged press conferences from the White House regarding the war on drugs. That is theater. That is the magician waving his left hand so you do not notice his right hand reaching into your pocket to extract your wallet. If you want to understand why your world changed forever, at 1:00 p.m. Eastern Standard Time on January 17, you must ignore the noise. You must ignore the political circus surrounding the Federal Reserve. You must look at the boring, cold, unfeeling ledger of the physical commodities market. The headline you should be reading is not about restoring democracy in Venezuela. It is about a single terrifying number that has just appeared on the trading desks in Shanghai and Geneva. $8. That is not the price of a coffee. That is the spread, the premium between the price of a physical ounce of silver in Shanghai and the paper price in New York. In a functioning economy, that number should be zero. Maybe 10 cents for shipping. Today, it is $8. Do the math. Apply that $8 discrepancy to the billions of ounces of paper derivatives currently sitting in the vaults of Western pension funds and banks. We are looking at a $250 billion hole in the global balance sheet. This is a solvency crisis that makes 2008 look like a rounding error. This is not a market fluctuation. This is a default. The Western financial system has defaulted on its promise to deliver physical reality. While you were arguing about politics, the mechanism of global trade snapped. Let us look at the forensic data. The numbers do not care about your feelings. They do not care about your political party. They only care about mass and velocity. On January 1, the People's Republic of China quietly implemented a new export licensing system for silver. They did not announce a blockade. They simply installed a bureaucratic valve. And for the last 17 days, that valve has been closed. The mainstream media told you this was a temporary administrative delay. The media lied. The data from the Shanghai Future Exchange shows inventory plummeting to levels we have not seen in a decade. The prompt delivery premiums are exploding. Why? Because China knows what is coming. They are hoarding the blood of the electronics industry. Look at the price action on January 16. Silver prices dropped 6% in New York. The talking heads on CNBC told you this was profit-taking before the holiday weekend. They told you the market was cooling off. Now look at the order flow. Who was selling? It was paper speculators on the Comex, liquidated by margin hikes from the CME group. Who was buying? It was not day traders. It was the industrial giants. It was the solar panel manufacturers. It was the defense contractors. They are bypassing the exchange entirely. They are flying directly to the mine sites in Mexico and Peru, offering 20% cash premiums over the spot price just to secure metal. They are panicking. Why? Because they know the truth that the screen is hiding. The warehouses are empty. The registered inventory at Comex, the metal that is actually available for delivery, is vanishing. We are witnessing a run on the bank, but the currency is not dollars. The currency is the strategic molecules required to build the 21st century. This brings us to the war thesis. You cannot print silver. You cannot print neodymium. You cannot print oil. When the paper price diverges from the physical price, the only way to settle the balance is through kinetic force. We are seeing a three-pronged coordinated offensive to seize physical assets before the dollar loses its final ounce of purchasing power. This is Project Omega. Evidence number 1, the kinetic diplomacy in the Caribbean. On January 3, the United States military initiated Operation Absolute Resolve. They invaded Venezuela. They bombed infrastructure in the north. They extracted Nicolas Maduro and put him in a cell in New York. The official story is counter-narcotics. Do not be naive. You do not deploy carrier strike groups to catch drug dealers. You deploy them to secure energy corridors. Intelligence indicates that the Maduro regime was days away from granting the Chinese People's Liberation Army naval basing rights near the Essequibo region. That is the Guyana oil basin. That is the largest offshore oil discovery of the last 20 years. ExxonMobil operates there, Chevron operates there. The United States did not invade to save the Venezuelan people. They invaded to enforce the Monroe Doctrine with high explosives. They invaded to ensure that the 800,000 barrels of oil per day sitting in that basin remain denominated in dollars, not yuan. This is resource realism. International law is gone. If you have the aircraft carrier, you get the oil. Evidence number 2, the Arctic annexation. Look north. The president has renewed threats to acquire Greenland, citing national security. The Prime Minister of Denmark is calling it the end of NATO. Negotiations have collapsed. Why Greenland? It is not for the ice. It is for the dysprosium and neodymium buried under the ice. These are the rare earth elements required for the guidance systems of the missiles used in Venezuela. They are required for the wind turbines in the North Sea. China controls 90% of the processing of these metals. The Pentagon has classified this dependence as a critical threat. The move on Greenland is not a real estate deal. It is a desperate scramble to secure a non-Chinese supply chain for the U.S. military-industrial complex. We are moving from free trade to armed procurement. Evidence number 3, the domestic purge. On January 12, the Department of Justice opened a criminal investigation into Federal Reserve Chairman Jerome Powell. This is the smoking gun of institutional collapse. The executive branch is weaponizing the legal system to break the independence of the central bank. Why? Because the debt is too high. The interest payments are mathematically impossible. They need the Fed to print, and Powell was hesitating. By publicly humiliating the architect of the dollar system, they have shattered the last remnant of faith in the currency. Gold knows this. That is why it is trading above $4. 600 an ounce. Gold is sniffing out the death of the Federal Reserve's credibility. So, who is the bag holder in this new reality? It is not just the retail investor. It is the loyal ally. The bag holders are the nations and institutions that played by the old rules. Japan, the United Kingdom, the European Union. These nations hold trillions in U.S. Treasury bonds. They hold billions in paper gold and silver contracts in London. They trusted the system. Now, they are watching the United States seize assets physically while devaluing the paper currency used to pay its debts. Look at the force majeure notices rippling through the mining industry. Rio Tinto, Glencore, they are declaring they cannot deliver. Who gets cut off first? It is not Apple. It is not Raytheon. It is the generic manufacturing base of Europe. It is the German automobile industry, which is already starving for energy and now cannot get the silver paste for its electronics. It is the pension fund in Leeds or Osaka that thinks it owns silver, but actually owns an unallocated claim against a bankrupt refinery. When the music stops, the unallocated account holder gets a check. They get a settlement in fiat currency. Here is your $90 per ounce. Thank you for playing. Meanwhile, the physical metal is trading on the black market for $150. And it is being loaded on to a truck headed for a Tesla gigafactory or a Chinese strategic reserve. You get the paper, they get the metal. This is financial conscription. The wealth of the middle class and the wealth of allied nations is being liquidated to keep the American imperial core solvent for a few more years. We are witnessing the Shanghai trap closing on the Western financial system. The arbitrage is impossible because the metal cannot leave China. It is the Hotel California of commodities. You can check out anytime you like, but the silver can never leave. So, what is the protocol? The time for speculation is over. The time for investing is over. This is about survival. We are entering a period of stagflationary grind. Costs will rise. Supplies will become erratic. The paper price of your assets might go up, but their purchasing power will vanish. Here is the resource denial protocol. Step 1, assume zero delivery. If you run a business that depends on just-in-time inventory, you are already dead. You just haven't closed the doors yet. The shipping lanes are compromised. The insurance premiums for traversing the Red Sea or the South China Sea are becoming prohibitive. Do not assume the truck will arrive. Do not assume the grid will stay up. If you are holding paper, silver, SLV, or unallocated gold in a bank account, sell it immediately. You do not own it. You are an unsecured creditor to a bankrupt counterparty. Convert that capital into physical possession. If you cannot hold it in your hand, you do not own it. Step 2, pick your side of the supply chain. Look at your portfolio. Are you holding the victims? Sell Apple, AAPL, sell Nike, NKE, sell the fast fashion retailers like H&M. These companies are slaves to a global supply chain that no longer exists. They rely on cheap shipping and peace. Both are gone. Sell the European banks exposed to commercial real estate and sovereign debt. They are the bag holders. Buy the owners of the physical path. Buy Union Pacific, UNP. Buy Canadian Pacific, CP. The rails are the only secure supply lines left in North America. When the oceans close, the rails become the arteries of the empire. Buy domestic resource extraction. Freeport McMoran, FCX, Mosaic MOS for fertilizer. They cannot import it anymore. They have to dig it up here. Buy the defense primes, Lockheed Martin, LMT, General Dynamics, GD. The invasion of Venezuela was not the last war. It was the opening ceremony. The military budget is the only budget that will never be cut. Step 3, short duration. Long reality. Do not hold long-term government bonds. The Powell investigation proves that the government will burn the currency to save the state. The yield curve is a lie. Short the duration. Keep your liquidity in short-term instruments or hard assets. Gold at $4. $600 is not expensive. It is repricing the collapse of the dollar. It is the only asset that has no counterparty risk. This is not a drill. The force majeure letters are already in the mail. The CEOs of the mining companies know it. The generals in the Pentagon know it. The era of financialization is dead. The era of resource realism has begun. The United States has signaled with its military actions in the Caribbean that it will burn the village to save the castle. Do not be in the village. Go to your pantry right now, open the door, look at the shelves, count the calories, count the days. If the ship stopped tomorrow, and they might, how long do you survive? Do you have antibiotics? Do you have coffee? Tell me in the comments, what is the one item you cannot survive without? If the global supply chain breaks tomorrow, if you have to, think about the answer. You are already a casualty. The insurance adjusters have left the building. This is archivist. The protocol is active.